Subprime growth in debt is surging, as you would expect when a real estate bubble is bursting and a global debt bubble is bursting. So let's get right into this. Canadians are applying for credit cards, not mortgages. Subprime growth surges. So this came out June 29th by Better Dwelling. What's really interesting is we're talking about data so far in the past, as I keep saying, like this is 2022 data and we're talking about it when right now in Q3 2023. I mean, that's just how ridiculous things are. And we've now got the spring market behind us. So it's interesting waters that we're going to be swimming in ahead. It's going to be really interesting to see. And I'm going to blow apart what you've probably been hearing about the housing market over the past 3-4 months. So anyway, let's just read this out. This data is interesting. Canada's climbing interest rates may be deterring borrowers from taking out new credit. Mortgages are the largest source of outstanding credit, but new originations fell by 32% in 2022. Fewer new accounts were seen nearly across the board, with originations dropping for personal loans minus 16%, line of credit minus 17%, and auto loans minus 3%. Only one major credit segment showed positive growth: credit cards. New credit card accounts grew by 20% in 2022, which is impressive growth. And I agree, that is totally impressive growth. But do you think that is sustainable long term when you're looking at what is going on with the household savings rate? I mean, Canada is the fourth most indebted country when it comes to households in the world, guys. And we've seen this peak in household debt to GDP, as I've gone over before. We've seen that the savings rate is absolutely cratered. So we know, where are people going? They can't afford to live their life. Where are they going? They're going to credit cards. We know that. The data is out. It's not hard to decipher anyway. I think it's just obvious to me and to you also. So kind of crazy what's going on. But that is what is going on. So basically, this shows what is going on with different segments as it comes to subprime. So originations rebounded earlier for low-risk borrowers. However, high-risk borrowers are gaining access. So if you look at subprime, that is the red line. You can see it went down in 2020. Kind of crazy, but it all went down really because guess what was happening? Everybody was deferring payments. Everything was all good because you don't have to pay anything back, right? The government came out with massive stimulus, massive deficit spending, and we're paying for that today with consumer price inflation. So really interesting. But if you look at what's happened, subprime is absolutely exploding. So we're above what we were even in 2017, 2018, 2019, 2020. So it's really not a good thing when you really think about it, is it? When you've got subprime borrowing growing, when you're in this last phase, in my opinion, of this credit cycle, of this bubble cycle that we've seen, which has not just been housing, it's been a lot of things that people can't afford, like autos, student debt. You know, it's been so many different segments, and that's the thing that people fail to understand. This is really the everything bubble, and that's the crazy thing. The risk is not just in mortgages, it's in a lot of different things. So absolutely insane what we're going to see going forward. And I wanted to show you this because if we actually go to household debt by country, you can see here that Canada sits fourth in the world, which is just unbelievable, isn't it? But Australia is number 2. So if I flick over to this, oh, look what's happening in Australia, guys. Oh, no. Good day, mate. So basically in Australia, what's happening is premium properties lead real estate revival, but is a double dip housing downturn looming? So the same thing is happening in Australia that we're seeing in Canada. So can you really use that immigration narrative to justify it when it's not just happening in Canada, it's happening in Australia, it's also happening in the United States, guys. So it's kind of crazy that people come up with all these different ways of justifying a credit bubble. Again, this is the MPA in the US. US home prices tick upwards after 7 months of decline. So, you know, and all the areas that have been particularly frothy in the US, guess what? Those are the areas that are seeing prices go up the most. So it's really not surprising when you think about it. It's actually logical. Those places that have been the most volatile are going to be the ones that continue to see the most volatility, even in terms of like a bull trap, because those markets are the highest when it comes to emotions. Emotions are running high in those markets, and that is evident in the volatility. You see, when you really boil these things down to basics, these markets operate on humans, human emotion. That's what these markets operate on. People try and pin it to all these different fucking things. I've been all over the world. I've looked at all different kind of bubbles. And guess what, guys? People say every time, oh yeah, there's a reason why prices are going up. It's the full moon, you know, whatever it is. The river is running more this month. So that's why, whatever it is, it can be stupid. It can be logical, like the immigration argument definitely contributes to the housing crisis and problems that we have in Canada. 100% agree with that statement. However, do I think that is the main reason that we have a housing bubble today? Absolutely fucking not. And I think that's the thing. It's the rampant lending, the rampant speculation, and nobody wants to point at that, because then you're pointing at the banks, aren't you? And really, it's not just been the people taking out the credit, but it's also been the banks not doing the due diligence, lending to anybody with a pulse. And you can say, yeah, there's a stress test, blah, blah, blah. There's ways around those things. You know, the reality is the lending has been rampant. We've seen the market detached from fundamentals. You cannot have a market detached from fundamentals without bad lending. It just doesn't happen, right? If your household income is this flat line and housing prices are going up this, then how are people getting the loans for those houses? You know, it's so logical, but people don't really think about it, you know? So anyway, sellers are slashing prices in the UK right now as the housing crisis really hits. You know, the Bank of England hiked rates 50 basis points to 5% now. And a lot of England is on variable rate mortgages and have seen people pile into the housing market. I'm from the UK, as you guys knows, and as you guys know, and I've seen many people, friends, family that have gone out and purchased property over the past 3-4 years. So it's kind of crazy to me, but I've seen it with my own eyes, and it's this exact same thing has been happening in Canada. It's also happened in the United States. It's just amazing how a narrative can drive this sort of thing. A third of all homes for sale in the fourth week of June were listed with discounts on their asking price up to 18% less than in the same week a year earlier, and even higher than during the pandemic, according to property website Rightmove. Rightmove is the biggest website for looking at property in the UK, by the way. It came as separate data revealed that retail insolvencies had surged almost 60% to the highest level for a decade, as rising borrowing costs inflicted toll on the struggling high street. And you know, Canada is very much following the path of the UK, in my opinion. The UK is in a massive depression. I mean, it really is dropping from a much lower level than Canada. Things are a lot worse in the UK than they are in Canada, believe me. But the thing is, Canada is heading for the exact same thing. It's doing the exact same thing as the UK. It's like the UK was in the early 2000s, in the mid 2000s. So it's following that same path. The same with the immigration that is happening. The UK also followed in that path. I mean, it wasn't the UK's choice to a larger point because it was the EU and different things, but the UK had a lot of immigration, a ton of it. And that is now contributing because you've got a lot of people who are poor, and it's like 1 in 4, 1 in 5, or 1 in 3. It's something crazy, the amount of people who are in poverty in the UK. It's just mind-blowing. That is a depression. It's a silent depression. Nobody wants to talk about it, but that is a depression. And then also New Zealand. I always like talking about New Zealand in a massive bubble like Canada and Australia, as we know. But New Zealand is also an interesting one because they started hiking rates before anybody else did. So I also find that interesting. And what I'll draw your attention to here is you can see, like, they had a bull trap as well, and they're still having, like, prices aren't going down in a straight line. That's what I'm trying to tell you. But they are going down nevertheless. And if you look in inflation adjusted terms, it's even weaker. It looks even worse, right? And here's the thing. The inflation numbers aren't even correct. And I'm not going to go off on a wild tangent and rant about that. But you guys know the inflation numbers that the government comes out with are complete horseshit. So the fact is, like, real inflation adjusted prices are falling even more than we think. And that is really of note to really think about. And that comes down to the fact that you have not had the wage increases for the past 25 years, not just the last 3 years, for the past 25 years. We just haven't seen the real wage growth to support it. So after 2008, everybody reconsolidated and said, okay, you can't afford a car now, you can't afford this. So everything just goes on to credit. Everything becomes credit. And we've become this credit-based economy that is so dependent on credit. And nobody can afford the lifestyles that they have today in Canada. And that is the crazy thing. Without credit, think how poor people are. It distorts it and makes people look like they are better off than they actually are. And that's the thing. In countries like Mexico, where people come to Canada from, and India and other countries, they don't understand that. They really don't understand that it's our official wealth that is in Canada when you look out and you look at the cars they're driving and everything like that. But people don't realize that. It's kind of crazy, but it is interesting nevertheless because when you come from that perspective to here and then you realize it's all debt, that must hit you like a ton of bricks. So kind of mad. But you can see on here, New Zealand property prices going down. And I think I've illustrated my point here about the US housing market that is also seeing home prices tick upwards and has done this spring. And we've also got in Australia, they're talking about the same thing. So I think it's fair to say, guys, that this is a global housing bubble, and it will be the biggest bubbles that see the worst impacts from this. And Australia hasn't even got as higher rates as Canada. They stopped before Canada. So, there is going to be massive devastation for this. There's still a lot of emotion out there. And that will burn off. The unemployment rate is low. And we know it's a 99.9% probability that the unemployment rate is just going to be going up from here. So it's just, we're going to see unemployment rise, and it's going to rise fast at some point. And that is going to be the thing that puts the final nail in the coffin, which is going to be fear. And then what happens after that? I have no idea. What the government's response to that is, I have no idea. But you can't put anything past this government because they are so ridiculous and stupid. So anyway, if you've enjoyed this video, you may like this video here. You might like this playlist here that I'm recommending to you. And I will see you in the next one. Take care of yourselves, guys. Peace. Bye-bye.